My lovely, beautiful friends, how are you today? Well, it's me, Gregory Mannarino. Let's start off with the date. It is Wednesday, August 29th, 2018. Before we even get started, I want to say, well, it might actually be possible that in the last video that I did yesterday, the whole thing about useful idiots, I may have pushed the boundaries a little bit there. But, however, everything I said was true and verifiable, but maybe my presentation was a little bit over the top. I woke up this morning and my eyeballs exploded when I looked at my email box. Wow. Anyway, if you have not seen that video, it's probably worth watching. Anyway, let's talk about what's going on right now. Hey, are you surprised? The S&P 500 and the NASDAQ are at new intraday record highs. No. You're not surprised at all, because I told you this was going to happen 2 days ago. It's not going to stop in this environment, no doubt about it, until it does. Again, look, we are in some type of fantasy land. You all know that. Maximum distortions across the spectrum of asset classes. Everyone wants to ignore it, and that's the truth. We can't lose sight of what's actually going on here. It really has gotten, and this is being done on purpose. Again, it's keeping people divided, keeping them distracted. But here, let's just put a perspective on that real quick. There is no way on this earth or off this earth to stop what is coming here. These distortions in this market are at extremes that we have never seen before. Never before, ever. What that means is at one time, this is going to correct to a fair value. I don't like to put it into the perspective that it's a collapse, because it's really not a collapse. It's a correction to fair value. Nothing at all, not one asset. Well, let me back up a minute. I cannot value, and I've admitted this right here, cryptocurrencies anymore. I lost my mojo when it comes to doing that. I don't know what they're worth in this environment. So with that said, leaving cryptocurrencies out of my little calculation here, because of the action in the debt market, world central banks that have suppressed rates now for an entire decade, buying everything in sight, no asset has an honest price discovery mechanism behind it. I've covered this a million times. Cash is moving into assets where it shouldn't go, coming out of things which should be going into. It's an environment of extremes. And again, it will correct to fair value. When? I have no idea. I can't even begin to speculate on it, because this is a managed market. Now understand, there's no free market. We have world central banks that have taken over everything. This happened in 2008 when the Fed stepped in here with quantitative easing 1, and then they did QE2 and Operation Twist and every other thing you can think about, and they are still buying bonds today. So QE never ended. I've explained that concept to you as well. The Fed can't just say they want to keep rates low. They have to get into the market and make it happen. All of this, in fact, that's where I want to go with this particular video. We got a second quarter GDP revised higher to 4.2. But understand, everything that we're seeing here is being built on the back of something that isn't on the elemental chart. That's really the truth here. It's a bubble. It's a bubble in debt that has inflated every single other asset. The dollar is a part of that bubble. The dollar is a unit of debt. It is going to melt down hardcore. It doesn't matter who's sitting here at the helm in that pretty White House over there. This whole thing is going to correct. There's no doubt about it. Personally, I think it could have been handled a completely different way, than how our president has done this right now. It's pretty straightforward, and I think it's very, very simple. If you recall, when President Trump got elected, I said publicly this was a game changer for the markets. It was very obvious to me, actually, why he became president. I don't want to sound like some kind of over-the-top conspiracy theorist here, but let me ask you, do you believe that the banks run the world? I believe that you probably understand that. It's not run by kings, queens, presidents, monarchs. It's run by the banks, period. They dictate everything that's going on here. Now, if Hillary Clinton would have been elected president, there is no way the stock market would be where it is now. Since Donald Trump has been president, the stock market has put on over $7 trillion in value. CEOs have gotten their salaries jacked up to the moon right now. They get paid in stock, for the most part, stock options. So the market has done exactly what they wanted it to do with this guy here at the helm, and the Federal Reserve is at the top of that pyramid right now, keeping everything going. President Trump wants the Fed to keep their foot to the floor here, keep rates suppressed, and all that will do is create more distortions, which will correct to fair value, but it's going to hurt people more. If President Trump, in my view, when he grabbed the helm there, said, listen, everybody, we have problems. He understands the debt bubble. He understands a lot of things that he doesn't talk about anymore. Our president, the reason why I voted for him, he said he was going to control debts and deficits. There's not even a peep about that anymore. It all started with his budget, biggest in history. He promised not to do that, but he did. He should have, if he would have leveled, been on the level, okay, with the American people and explain to them, all of us, that we have problems. We're in an environment that cannot be sustained, and there's going to be a little bit of pain. But I'm going to grab this by the reins now and correct this here. Yes, the stock market would not be where it is right now, but it would be more real. We have a market whose valuations we have not seen before. I think the only time it's been higher than this is during the dot-com bubble, I believe. It's way higher valuations than in the last meltdown here. Our debt is monumentally worse than last time. He could have handled this a different way. Instead of hyperinflating the stock market on the back of super hyperinflating a debt bubble, and he continues to do this. He could have handled this a different way by leveling with the American people, explaining to them that we have to take certain action to fix the situation, or at least lessen the pain that's coming down the pike. The way he's handled it now, a great many more people are going to suffer when this all corrects to fair value. And there is no doubt about it, and there's no way out of it. That's the truth. Now, so let's cover a few things. Again, as I am doing this video blog, new record highs for the S&P 500 and the NASDAQ. I have no idea how this market's going to end. Although, again, the dynamics are in place for the market to move higher. They're buying up some bonds right now as we speak. This is stock market positive. You know that. So we got this revision in GDP 4.2. Actually, I had to write some stuff down today. I rarely do this, but it's too much, honestly. Understand, these metrics that they use to measure GDP and unemployment, President Trump spoke out against these under President Obama. He said these numbers were not real, the way they were being used. But again, under him, they are real. That bothers me a lot. It really does. I thought that these things would be fixed as well. So this 4.2 print or revision on the GDP, you take it with whatever you want to take it with, truly. But let's put a couple of other things into perspective here. So apparently this is as good as it gets. We've been hearing this for the longest time, and I am more than certain President Trump is going to tout the 4.2% GDP. He's also going to tout the stock market hitting new record highs. There's no doubt about it. But we also understand, and I'm going to urge you to verify what I'm saying. Don't take my word for it. 4 in 10 Americans right now are struggling to make ends meet. We have household debt, consumer debt at an all-time record high. Meanwhile, we are seeing credit defaults, credit card defaults, and mortgage defaults starting to creep up. People are struggling. Again, 4 in 10 Americans are just, can't even make ends meet. Did you know that over 21%, think about what the number I'm going to put here, and I want you to verify this, 21% of the population of America is receiving public assistance? If this is as good as it gets, that's pretty frightening. But again, these are things you're not going to hear from the mainstream, from our president. It's just not going to happen. It's so crazy. What else did I write down here? Wages aren't rising. We know that. We keep hearing about this really strong environment we're in with regard to unemployment, but wages aren't keeping up with anything. All we're seeing is prices that are rising. And what about these trade wars here? Have we seen at the ground level here, how has this helped the middle class thus far? It has not helped us at all. We're bailing out farmers. Prices are rising. And I'll give you this. This is for down the line. When he fixes this, hopefully he will fix it. But for now, there's going to be more pain. That's the truth. Anyway, I wanted to put some of this into a perspective, and I want to add this as well, and I'm going to say it right here and right now. I've been getting a lot of questions about the Federal Reserve raising rates next month. About half of you thus far do not believe the Fed's going to raise rates next month. With this new number, maybe you're going to change your mind now, with this GDP revision of 4.2, the Federal Reserve has no choice but to nudge the federal funds rate. Again, I have been wrong one time, and one time only, in all the years since 2008 with the Federal Reserve. I mean, my record is unbelievable. It really is. It's the best out on the street. It's the best anywhere. No one has called the Fed better than me. That's the truth. So that's what's going to happen. We will get a rate hike next month. They have no choice now. They're back to a corner. The Fed doesn't want to do this, but that's what they are going to do. No doubt about it. So what's the takeaway from all this? It's pretty simple here. The distortions in this market are going to get worse. Stocks are going to go higher until they don't. An incredible amount of effort is going into keeping rates suppressed, despite the fact that we are going to get a rate hike next month. I'm talking a 25 basis point hike to the federal funds rate, the extreme short end of the curve. Curve is flattening out. We all understand that. That's another sign that things aren't as good as they are. The other sign, going back to the Federal Reserve, is they have admitted that they cannot normalize rates. How can we have a gangbusters GDP number, super low unemployment, but the Fed can't normalize rates? This is their words, not Greg Mannarino. I'm not making up this normalized thing. This is their words. Understand? So, and I'll tell you, it really does get to me when you get all this stuff shoved down your throat, and then you look at what's happening on the ground. The middle class is being decimated. And this is not something new. This has been going on for quite a long time, and really got started under the last guy, President Obama, who did everything he could to destroy the middle class. Look, in the end, what all of this comes down to, and I think where we're missing the big picture here, is this is a wealth transfer setup. That's all this is. The Federal Reserve throughout history has been a serial bubble blower. They blow bubbles like they do now. They allow them to deflate. Everyone who gets stuck on the long side of this market through some type of an investment plan, a 401k, gets fleeced. And all of that cash, as the market goes down, gets transferred to those individuals, the investment banks, traders like myself, who are shorting the market and legally taking that cash. That's all that's being set up here. With regard to the dollar, the U.S. dollar will remain the reserve currency unless we end up in a world war. I mean, we have fought wars to put the dollar where it is right now and establish the petrodollar system. Do a little research, do your history on this. So forget about this dollar reset. The dollar is going to melt down at one point, no doubt about it, but that's not going to change its status. All that's going to do is hurt the people on the ground, you and me, middle class. I sincerely believe this, and I've been saying this for years. We are moving into a two-tier society, the haves and the have-nots. It's unfolding right before our eyes. I mean, look at some of these numbers that I just put out. 4 in 10 Americans just can't survive at a normal level without having to struggle. We have more than 21% of our population getting assistance. But this is as good as it gets. That's frightening to me. Should be frightening to you too. Systematic wiping out of the middle class is continuing and is going to accelerate at one point. The banks will still have the upper hand. This is what this whole thing has been about since the very beginning. It just won't change. It'll never stop. I think banks are going to consolidate power moving forward, especially how, and again, I'm not going against President Trump for those of you that just can't handle it, but President Trump and other world leaders are doing everything they can at the same time to make sure their central banks are all doing the same things. Again, it's the central banks dictating policy. Has nothing to do with the guy or the girl sitting there at the top. Understand? So we are going to witness a meltdown of the middle class, a loss of the middle class in a grand, unbelievable, like almost biblical event. And it's going to happen in a rapid fashion when this starts to roll out. Don't know when that's going to be, but everything that I've been explaining to you for years is happening. It's starting to happen right before your eyes. Just got to look for it. I mean, like I said, last time we bailed out the banks and Wall Street, this time we're going to bail out countries. The middle class is always going to be on the losing end of this. There's no way out of it, unfortunately, unless there is a worldwide revolution against the world's central banks. And I'll be honest with you, they're going to squash us all like bugs. That's the truth. And it does not matter who sits there in the pretty White House or wherever in the world our leader may be sitting, or a leader may be sitting. Look, if you think I've covered anything that's important in this video, it's been long, please share it. And as always, give me a thumbs up if you think it's important. We will resume the festivities later on today. See you then.